Imagine you're 25 years old. You finally did it. After years of working, saving, skipping vacations, and pretending instant noodles were a balanced diet, you've managed to save $50,000. For the first time in your life, you feel like you're getting ahead. Then everyone around you starts giving advice. Your parents say, buy a house. Your friends say, buy a house. That guy on social media who somehow became a millionaire at 19 says, buy a house. Apparently everyone agrees. A house is the greatest investment ever. Case closed. But then another group appears. The investing crowd, the stock market people, the people who use words like compound interest so often that it starts sounding like a religious chant. And they say, don't buy a house, invest the money. Let your money work for you. Now you're confused because both sides sound smart. Both sides have charts. Both sides have statistics. And both sides think the other side is completely insane. So let's settle this. Meet David. David is 25. He has $50,000. And David decides to buy a house. Not a mansion, not a castle, just a normal house, a place to live, a place to call home, a place where nothing will ever break. At least that's what David thinks. Meet Michael. Michael is also 25. He also has $50,000. But instead of buying a house, Michael invests the money into a broad stock market index fund. Then he continues investing every month. Simple, boring, no excitement, no granite countertops, no backyard, no fancy front door, just numbers on a screen. Now fast forward 1 year. David feels amazing. He owns a house. He's posting photos online. People congratulate him. He's officially an adult. Then reality arrives. The water heater breaks, $2,000. The roof needs repairs, $3,000. Something starts making strange noises in the wall. Nobody knows what it is. Nobody wants to investigate because everyone already knows the answer. Whatever it is, it's expensive. Meanwhile, Michael receives an email from his investment account. His stocks went down. He panics, checks the market, refreshes the page, checks again, refreshes again, then remembers something important. He wasn't planning to touch the money anyway, so he closes the app. Problem solved. Fast forward 5 years. David's house has increased in value. That's great news, except David doesn't actually feel richer because he still has a mortgage, property taxes, insurance, maintenance, unexpected repairs, and a lawn that somehow grows faster every weekend. Owning a house is a little like owning a dragon. It looks impressive. People admire it, but feeding it never ends. Meanwhile, Michael has been quietly investing every month. The market went up, the market went down, the market went sideways. The market did all the weird things markets do, but Michael kept investing because he understood something most people don't. The stock market rewards patience more than intelligence. You don't have to be a genius. You just have to avoid doing stupid things for a very long time. That's harder than it sounds. Because humans love action. We love pressing buttons. We love feeling productive. We love doing something. Patience feels like doing nothing. And doing nothing feels uncomfortable. That's why people constantly jump between investments. 1 month it's stocks, the next month it's crypto, then real estate, then gold, then some mysterious opportunity a guy on YouTube promised would make everyone rich. Most people spend years chasing shortcuts while wealth quietly rewards consistency. Fast forward 10 years, David is now 35, Michael is also 35, and finally things are getting interesting. David's house has gone up in value, a lot. The neighborhood improved, new businesses opened, property prices climbed. On paper, David looks wealthier than ever. And to be fair, he is. But there's something people rarely talk about. A house is not just an investment, it's also a lifestyle. You don't buy a house and then forget about it. The house becomes part of your daily life. It demands attention. It demands money. It demands time. It's like adopting the world's most expensive pet, a pet that doesn't love you back. Meanwhile, Michael has spent the last 10 years doing something incredibly exciting. Absolutely nothing. Seriously. He kept investing every month, month after month, year after year. No dramatic moves, no secret strategies, no financial ninja techniques. just boring consistency. And here's the funny thing, boring works. People don't like hearing that. People want excitement. They want the secret stock, the hidden investment, the life-changing opportunity nobody else knows about. But wealth usually doesn't arrive with fireworks. It arrives quietly, like a plant growing in the corner of the room. You don't notice it every day. Then one day you look up and think, when did that get so big? That's compound growth. And compound growth is weird. The first few years feel disappointing. You check your account. Nothing exciting. You check again. Still nothing exciting. You start wondering if this whole investing thing is a scam. Then something strange happens. The numbers start moving faster. The money starts making more money than you contribute yourself, and suddenly you're no longer carrying the investment. The investment is carrying itself. That's the moment most people never reach, because most people quit too early. Humans are terrible at waiting. We microwave food because 30 seconds feels too long, and then we wonder why building wealth feels difficult. Now let's compare David and Michael again. Who won? Well, that's where things get complicated, because life isn't a math equation. David has memories, birthday parties, family dinners, a backyard where his kids played, a place that felt like home. You can't put a price tag on that. Michael doesn't have those memories, but Michael has something else. Flexibility, freedom, options, the ability to move cities, change jobs, take risks, start businesses. His money isn't trapped inside walls, it's liquid, available, ready. So who made the better decision? The annoying answer is, it depends, I know. Nobody likes that answer. Everyone wants a winner, house or stocks, red button or blue button, this or that. But the real lesson isn't about houses, and it isn't about stocks. The real lesson is about opportunity cost. Every decision costs something, even good decisions. When David bought a house, he gave up other opportunities. When Michael invested in stocks, he gave up other opportunities too. Every yes creates 1,000 no's, and successful people understand this. They don't ask, what do I gain? They ask, what am I giving up? That's a completely different way of thinking, because money isn't really about dollars. Money is stored choices, stored freedom, stored opportunities. Every dollar you save today gives future you more options tomorrow. That's why wealthy people often think differently. They don't see money as something to spend. They see money as something that buys flexibility. And flexibility is powerful. A lot of people spend their entire lives trying to look rich. The car, the clothes, the watch, the house, the image. But truly wealthy people often focus on something else. Control. Control over their time. Control over their schedule. Control over their future. Because at the end of the day, wealth isn't about having expensive things. It's about having choices. The choice to work, the choice not to work, the choice to leave, the choice to stay, the choice to say yes, the choice to say no. And that's something no luxury car can give you. So if you're trying to decide between a house and stocks, here's the truth. There isn't one perfect answer, but there is one terrible answer. Doing nothing, waiting forever, overthinking every decision. Because whether it's real estate or investing, the biggest mistake is standing still. The people who build wealth aren't always the smartest. They aren't always the luckiest. They're usually the people who started investing, started saving, started learning, started before they felt ready, because nobody ever feels ready. And 20 years from now, you'll probably forget what the market did next week. You'll probably forget interest rates. You'll probably forget most financial headlines. But you'll remember one thing, whether you planted the seed or whether you spent it, because the future belongs to the people who plant seeds, not the people who keep searching for shortcuts. And that's the biggest money lesson most people learn far too late.